Hello, everybody. I'm Kenny Avery. I'm going to fill in for Michael tonight. If you don't know, Michael and Reggie lost their dog last night, Samantha. So he will be back. He's going to take the night off. Tonight, I have David Patayak, and he's going to talk to us about VA loans, how to go about it. And David, if you can do me a favor, why don't you give us a little bit of a background on yourself and how you got involved in this?
Yeah, definitely. And yeah, Kenny, thank you for having me on. So David Piatek. So how I got into this is that I've been serving in the National Guard for the last 16 years. And what I found about 8 years ago, being in the lending space and real estate space, is that I had a lot of people coming to me from my unit and then, from outside the unit that were veterans just reaching out, asking questions about the VA home loan. And what I've realized is that there's so many misconceptions that exist for the veteran community, no matter if you just joined the military or you've been out for 40 or 50 years, information isn't it isn't equally spread out to everybody, right? So a lot of people have different ideas of how the program works. So a couple years ago, I decided to create a YouTube channel called VA Housing Education, where we do dispelling myths that are out there in the veteran community. We also talk about the benefits of the program, and we do a lot of live events talking about current topics, trends that are going on, because real estate is an ever evolving subject. And that's why we did what we did, just because out of the passion of helping veterans, for people like ourselves, actually, to be able to go through the home buying process and get all the information they need to make an educated decision.
Well, how difficult is it to get a VA loan?
It's actually pretty easy, but people make it seem like it's really hard. And I think there's a lot of there's a couple things to that go with that. And to be honest, Kenny, I could probably talk for like 8 hours to just about any of these subjects, right? So one of the things that I would say make it difficult, there's a couple things that go into that. One is that veterans disqualify themselves from the program. And there's a lot of veterans that I meet that have bought multiple homes that never used the VA home loan because they thought it was a hard process, right? So we have that piece. Or they disqualify themselves from actually becoming homeowners. And I'll share a good story with this and with that and here in a little bit. The other part is that lending profession or let people in the mortgage space and also in the real estate space steer veterans away from using their VA home loan benefits because of misconceptions that the appraisal is really hard. The qualifications are really hard. The appraisal, the property won't pass a VA inspection. Now all of a sudden you're going to have an issue. And then let's say for affordability, condos are a great way for veterans to get into housing markets where it's really expensive because condos typically are going to be cheaper. Well, in those cases, condos require VA approval, which is actually pretty easy to get approved. So that's just something to keep in mind in that process. And the other part to this, Kenny, is that we've helped homeless veterans become homeowners because they didn't realize that they can use their VA disability as sole income to qualify for a home. And as you know, in Illinois, if you have a 70% or higher disability rating with an equalized assessed value of 250 or under, and I'm going to take a time out there because I could talk numbers and acronyms all day long and people are going to be confused on it. So basically what that means is that the equalized assessed value is not what your house is worth, right? It's
Right.
what the county assesses the property for tax purposes. That's the main thing, right? So example, in like Lake County, if you have a property it's worth 750,000, it will be assessed at about a $250,000 assessed value. Okay. Now,
Okay.
earlier this year, like in June or July of this year, we're in 25 people. In 24, in June, July, the governor signed into law that if your assessed value is over the 250, they give you a tax break up into 250, and anything over that you have to pay taxes on. So keep that in mind as you're going through that process, because sometimes taxes aren't reassessed when you're buying a property yet, and they may increase because your purchase price has increased. Okay. And they may
All right.
then calculate that against you. Other times you may go in and look at a property, taxes may seem high and the property is overassessed, but then you purchase it and then have them reduce it. Like that's what happened to me. They had my property overassessed by a pretty good amount. So that's just another thing to think about when you're going through this process. And, you know, it doesn't make a difference how old you are. If you feel like you should, you have maybe a disability from the military, is to file for VA disability, because you'd be surprised on what you can get. I mean, I had that happen recently with someone today. They're like, I didn't even know I could apply for this 10 years ago when I got out of the Marine Corps. You know, now I'm at 100%. Like I'm doing it on my own the first shot around. But there's plenty of organizations that exist that can help you through that process that don't charge a penny.
Now, how does this work for our homeless veterans?
So the VA loan is a benefit that is earned, right? So if you meet the time and service and character of discharge, then you're able to use the VA loan. It doesn't make a difference what your income is. And for the example with the homeless veteran I was talking about, is that they received 100% disability, but they weren't they didn't realize that they can actually use that money to purchase a property, right? And they were just kind of going from place to place. And then we also see that when veterans recently receive VA disability, and a good example of that is that, like by level where I'm at, you have they have like a program where they house veterans depending on income. But again, VA disability is not considered income anymore. They'll actually house them for a while, help them save money, put them in some financial classes. And then when it's time for them to get out, either they go into housing, they can qualify for like a HUD-VASH program, because then the VA actually gives you money to pay for rent. So it does definitely offsets your expenses, which also allows you to save money, right? Because as we know, home ownership is not just about, hey, I have my amazing VA home loan benefit, right? No money down, no private mortgage insurance. If you have a 10% or higher disability rating, you don't have to pay the VA funding fee. So really all you have to pay for is closing costs. And especially if you're looking in the winter markets, like now where it's cold, it just snowed the other day. People aren't necessarily looking at homes during the wintertime, which is the best opportunity to be able to get into home ownership. And then that piece of not paying property taxes. Illinois is one of the only states that at 70% you get a tax exemption, a full one. Because in most states, you need 100% PNT to get that exemption. So that's where one of the things where Illinois definitely is above the others. But in retrospect, you know, when they're talking about legislation now, they definitely I think they feel like they made a mistake, because a lot of people applied for the tax exemption. You know, counties are kind of bleeding money.
Right. I fall into that 100%. I'm permanent, so I fall into that here in Will County. I don't pay that property tax. Let me ask you another question. Once you get your VA loan, let's say 10 years down the road, you want to sell your house and you want to buy another house. Can you use your VA? How many times can you use your VA loan?
It's unlimited.
It's a one-time thing.
No, unlimited. And you can have unlimited VA loans at the same time.
Really? Mm-hmm. So it doesn't. There's no limit whatsoever.
There isn't, but there's, just like anything with the VA, there's a catch to it all. Okay, so let me break that down, and I'm going to try to make it. I'm going to first explain how that works, and a couple of some misconceptions that are on it. So one big misconception is that you can only use the VA home loan once. So that's not true. You can use it multiple times. Now, when it comes to having so if, let's say you, like you mentioned, Kenny, you bought a home, you sold it, you then purchased another property, you've basically reinstated your full benefits, and you can Charlie Mike and purchase another property as long as you're eligible and qualified. So there's two sets of rules. A couple of years ago in 2019, they came out and said that if you don't have an outstanding VA home loan, there is no limit on what you can purchase as long as you're eligible, meaning you don't have an outstanding VA home loan and you have eligibility. And then you have qualification that you can actually afford that property. So if you wanted to buy a $10 million home with zero money down, the VA loan will allow you to do that. I'm not recommending people do that, right? But it's just that's the benefit you have. Now, now this is where it gets confusing because there's two sets of rules. New rule, hey, no limit as long as you're eligible and qualified. We go back to the old rules when you want to keep a current VA home loan and you want to purchase another property. So this is an easy example. In Illinois, the max loan limit, and again, this only applies when you have multiple VA loans at the same time, is $806,500. So if you bought your first house at $406,500, you would
Okay.
still have $400,000 left in entitlement to purchase another primary residence up to that $400,000 without a penny down. In fact, you could buy two $200,000 properties with no money down and have 3 VA home loans. Now, the question probably people have when they hear that is that, well, I thought the VA loan is for your primary residence, and it is at the time that you purchase it. A primary residence can turn into an investment property. So keep that in mind through that process. And then let's just say the property's over $400,000 in this example. You just pay a 25% down payment for the difference. So if it's $500,000, it's $100,000 more. So you pay a $25,000 down payment to use the VA loan again.
Would you recommend? I know it's zero down, but would you recommend to people, to vets, if you have the money, go ahead and put it down though, to lower that payment a little?
It's tricky. Dave Ramsey did a video about VA home loans, and he does not like them. And the reason why is that people are not putting money down on their property, so they didn't have instant equity in the property, and they think this is the VA loan is a benefit, right?
Right.
If you buy and so this is kind of up for discussion, and I'm going to give a couple examples where sometimes it makes sense, sometimes it doesn't, and it's really based on your financial picture. A lot of our veterans that we help do the home buying process do put money down. They put 5 to 10% down payments, and I'm going to explain why. If you buy a house at 100% financing, and let's just say it's for $300,000, well, especially if you don't have a VA disability, you have to pay a VA funding fee. So technically, that VA funding fee gets tagged on to the balance of the loan. So now it's going to be $309,000 and some change that you're getting a home for. So you're going negative on equity right away when you purchase.
Okay.
And it's not necessarily a big deal if you're going to live there for a long time, but one, you shouldn't be buying a home if you're going to live in it in a couple years or less and sell it, because that's really hard to like flip a profit. Normally you break even after 3 years. So, but life events do happen, and then you might have to sell on a pinch. But so that's one thing. The second part is going to be if you don't have a service-connected disability rating and you, let's say, don't want to pay the higher VA funding fee, then you put a 5% down payment. It reduces your VA funding fee. Let's say you've used the VA loan a couple of times, from 3.3% to 1.5% VA funding fee. If you do a 10% or higher down payment, it's 1.25% VA funding fee that gets added on. So it's all based on both the financial picture. It's also going to be based on if you're selling another property or you have money from that to be able to put down. And then the third part is going to be, what are you comfortable with in a monthly payment? Because I'll tell you, the number one thing that us as veterans need to focus on is your budget, knowing what you can afford, not what the lender tells you. Because, I'll tell people like, yeah, you're approved up to $4,000 a month. They're like, wait a second, I only want to go up to $2,000. And that's smart, because you got to know your budget, how you spend money, and also credit, because with good budgeting, you have good credit, and good credit gives you the best financing terms available to the veteran community.
What happens if a veteran doesn't have really good credit? I mean, does he or she still qualify for a VA loan?
So another thing to that is the VA technically has no minimum credit score, but they do have minimum requirements for what is considered to be like doable VA home loan. And the primary thing behind that is that the last 12 months, the veteran must be able to show on-time payments of their debt. Now, if there's one thing that like a hiccup or something happened that's explainable, hey, lenders can look at that. But typically, lenders are really looking at 500 plus. Typically, if you're under 600, you're going to have more recent lates or collections, which can hinder you from using the VA loan. But I'll tell you this, never disqualify yourself If you guys want, you can schedule a call with me. Check out the YouTube channel. I have a bunch of links on there to schedule a call with me, and we'll be able to go through it with you to make sure that we can put you in a better position, if not now, at least later, and have a game plan for that.
So it doesn't matter on what county you live in. I mean, they're pretty much it's pretty much all the same setup for everybody then, right?
For as far as like the loan?
For the loans.
Yeah, in general, the VA loan is the same across the country. If you have multiple VA loans, that changes. I don't want to get into it because that's probably going to confuse folks. But in general, the VA loan works the same across the country. The only time you have to be Illinois is not an issue. But if you go into if you move to other states that are community property states like Texas, that does change the VA loan. If you have a spouse that's not on the mortgage, it can change the dynamic of the loan itself. But I did like a whole video on that on my YouTube channel. If you live in Illinois, you're not planning on moving, then you're good.
And say, I buy a house, I use my VA loan, and then, God forbid something happens. How would my spouse how does she take over that VA loan?
That's a great question. So, and it's a tricky one because it's based on each person's situation. The only way the VA loan passes on from us to spouses is if you pass away on active duty, if you die from a service-connected disability rating, then there's like ones from older, like if they're POWs, like without, that's like back from Vietnam. I'm talking about more recent ones. Then the loan passes on to the spouse, and the spouse has to submit for the first time, they have to submit their certificate of eligibility, and then they can use the VA loan. With that, if the veteran met the disabled veteran criteria for not paying property taxes, that also could pass on to the surviving spouse. So keep that in mind. Okay. Now, what happens when it comes to let's say you don't have a VA. Let's say if I don't have a VA disability rating and I own a home, my spouse is not on the mortgage, and we see a lot of that. If something happens to me, they're just on title. What are the options that exist? Well, one, I've talked to the VA about this. The bank technically can still foreclose on the house because the spouse is not a promissory note signer. And I'm not an attorney, as my disclaimer. This is like real life. Like I've gone through this myself, and also, have contacted the VA about this. The other thing that you can do, a lot of veterans don't realize, is that you can't buy a house in a trust, but you can put it in a trust after you've closed on the property. Furthermore, if you are however they set it up, you still can get your property tax exemption in Illinois if you put the house in a trust. So that's one concern for people, but at least you have it set up, and then the bank wouldn't know if the primary veteran passed away in a trust, because the mortgage payment would still be continued to be paid. Now, no, if they don't meet the criteria to be able to get that loan, just remember that once that house is paid off, that VA loan can't be used again. It can't be passed on to kids. There is a way technically to do it, is if they assume your VA home loan. That's really the only way, but that's only on that property.
Okay. What about refinancing through a VA loan?
Oh, yeah. Okay, you got some good questions today.
Thank you.
All right, so refinancing a VA home loan. So one, you can do what's called an interest rate reduction refinance loan. That's where you currently own a VA home loan and you want to refinance it and get a lower interest rate. Now, over 50,000 people refinanced last year with an interest rate reduction refinance loan. Just be very careful with them. I look at them all the time, and most of the time I'm like, they're not even worth it for the amount of fees they charge you. Yes, the VA does have parameters like 36-month recoupment period. Rates has to be 0.5% or lower, but they're still able to charge you fees. And then there's other things that don't count into this recoupment period. That's number one. The other part with that is that it's really easy. There's no appraisal. So even if you have a 10% disability rating, that counts as your income to qualify for an IRRRL. You can't pull any cash out of that. It's just basically a refinance. The other part is that you can do what's called a cash out refinance. You can leverage the equity in your property and pull up to 100% of the property's value out with cash. I don't know if I don't recommend that necessarily, but you're allowed to do it per the VA.
Is that a
And then
one time? Is that a one time or
unlimited?
unlimited?
Unlimited. Yep.
Unlimited.
And if you have the VA funding fee waiver, then you don't have to pay the VA funding fee. But if you don't have it, then it's always going to be 3.3%. So it's, I think it's just a little bit tricky with that. And then, yeah, you do the interest rate reduction refinance loan, the cash out refinance. Those are the two main type of refinances on a property. And I'll tell you one thing, Kenny. A lot of veterans, this I feel it's like a scam. It's technically not a scam, but veterans do get scammed with this. Is a lot of veterans get steered away from using their VA benefits and using benefits like FHA or conventional because they get steered away from their benefits.
Why is that?
Told is, have you heard that before?
No, I haven't. Why are they trying to steer them away?
Oh, just because they may not know the process or misconceptions. That literally happens every week. I'm on calls and they'll be like, well, why can't they use a conventional loan to do this? And I'm like, that's the benefits they've earned. And this is a great loan product. But bad experiences, large companies that may have call centers, just like, when people do qualify a veteran, I'll get off topic here for a second because it's relevant, is, veterans will go to some of these big companies that constantly market to them, right? And they submit the bare minimum documentation. They get a pre-approval. They go on their contract. 3 weeks in, a week before closing, they get denied. I know this because I get calls all the time from our channel. We're like, hey, and then we'll look at it and be like, well, why didn't they ask for everything up front? When you're going through the qualification process, it should feel like a lot, right? You need to submit your tax returns, pay stubs, bank statements. Everything needs to be reviewed so the lender could then review it and be like, hey, this is going to be a problem. But in a chop shop, as I would say, right, they're not going to have the time because they're just basically churning numbers. So for them, if you don't get the house, it's no big deal.
Right.
But for us, we care because we're not a factory. We're making sure that, whatever that you're coming, let's say, to us for, and you can find other people like this, is that it's as thorough as possible. So when you go through that process, it's good, right? So this is why they get a bad rep because, one, realtors don't necessarily have a lot of experience working with veterans. And then when they do, they hear horror stories from other people. So that's why they kind of get steered away. But it's very expensive. And I did a video on this as well, talking about if you use a different loan product than your VA loan the first time around, it's a very expensive process. And you typically cannot refinance after 6 months of home ownership like they tell you that you can. It's extremely expensive. On average, it's like $20,200 plus closing costs just to make that happen.
I was going to say that the closing cost is what really kills people.
Well, plus remember, if you don't have a VA fund, if you don't have a, we can get real technical. Like if you have a over 90% loan to value, but even though you're not doing a cash out refinance because it's an FHA loan to a VA loan, it's considered a cash out refi. So now you have to pay a VA funding fee. The VA funding fee is capped at the 100%. But if you're over 90, you're paying a crazy premium in the interest rate. And you have to get another appraisal. And it doesn't mean that it's going to appraise even though you bought it at a certain price. So that's why I say it's like they make it sound like it's very straightforward, but the devil's in the details on this.
What are the well, for a VA loan, what would the cost be? The fees and everything.
So this is the thing. In general, if you look at closing costs, they're identical minus the VA funding fee and potentially a termite inspection. Okay. So the VA funding fee is the only fee on a purchase that gets rolled into the mortgage, right? So if you buy a place for $300, maybe $309 is going to be what your loan balance is because it gets rolled in. This is the challenge, though. I did a video today talking about how much people actually spend in closing costs on VA home loans. And I feel that it's because maybe the lending community feels like, oh, they're doing 100% financing. we can charge them more money. And so on average, veterans pay 2 to 3% more in closing costs because lenders are charging them extra money. And the reason why that exists is that, Kenny, if you ever watch or if you're ever online and you kind of see a lot of marketing being marketed to you, right? It's not cheap to do marketing.
No,
And if
no.
companies are spending that kind of money to market to you, you are the one that's going to pay them for them soliciting you.
Right.
That's
Right.
like, that's just hands down. That's just business 101. And that's why when we do our stuff, that's why we do all our stuff on YouTube. I do stuff like this because it's more of like, hey, let's just get onto the community, educate people. You make that decision. And then typically, I mean, they're going to be happier because the savings get passed on to the veteran versus trying to hound them.
A lot of research goes into this.
Definitely.
A lot of veterans need to do a lot more research is what I'm saying.
100%. And that's the thing is like, I love it when someone watches a video and they're like, hey, I've watched a couple of the videos. I got an idea. I need some help kind of finalizing. Is this what I'm thinking is correct? And we'll do that, right? We'll spend 30 minutes. We'll go through whatever scenario you may have. And then we'll have a plan. Like, okay, yeah, you were right. This is how it's going to work. Or, hey, we need to tweak this a little bit. Or let's take a look at the financial picture now and see where you stand. Because what's like another thing that people ask too, Kenny, is that when should I actually talk to somebody about getting a, pre-qualification, looking at my finances? And I would tell you at least 1 year out. And the reason why is because a lot of planning goes into buying a home. You normally just don't wake up and say, today, Terry, is the day that I am going to buy a house. Well, that's not how it works, right? Normally, you talk about it with family. You're talking about it at the dinner table. You're talking about the Christmas party. You're talking about it. And what's not good is that, hey, when it's time for you to be like, hey, in 2 months, we're buying a place. Let me go get qualified. And all of a sudden, you can't do it. And now you're delayed another year. It's just heartbreaking for folks when you can take the steps ahead of time. And it doesn't hurt you. Lenders don't charge you money. They shouldn't anyways, to take a look at your financial picture to tell you where you stand. Or some people are like, hey, I want to buy a home in 6 months. I'm currently in school. I'm going to graduate in June. And July, August, I'd like to buy a place. This is what I'm looking to do. Hey, I'm a nurse. How much money would I need to make to be able to qualify for a place? And then also, hey, you need to make about 60, 70,000 a year. Okay. Hey, if I know minimum 60, I know that's kind of what my target is to kind of get where I need to be. And
right.
That's information that you shouldn't do on your own because it's,
well, that's where you come into play.
Yeah.
And that's where you sit them down and then you write the program out and say, look, this is where you need to start.
Right.
This is how you need to end up. But you walk them through that entire process.
Yes. We definitely walk them through that entire process for that. And one thing too, Kenny, I'll mention is that, it doesn't make a difference how young somebody is. Like we've had 18-year-olds purchase homes and we've had like close to 90-year-olds buy homes. Okay, it doesn't make a difference. You really need to be educated across the board. And but what we do find with older veterans is that they're definitely like stuck in the 70s GI Bill. And there's been so many changes to the program. And the biggest one is that, like you mentioned, is that you can use the VA loan more than once. Sometimes we'll just have, actually, let me touch on something with the VA disability thing, which is important. You don't need to use a VA loan in order to get the disability, to not pay the property taxes if you meet the criteria. All you have to be is on the title of the property. And we'll give you an example of somebody that we know because we do a lot of events. They had their father, who was a Vietnam veteran, 100% disability rating, living with them, with the son and the wife. If they put him on the title of the property because he's living with them, they are also now exempt from the property taxes. Just need to be on the title of the property.
Correct. That's the situation that I'm involved in too.
Yep.
Yeah. You get that property tax exempt, and the the one thing about that 100%, you do it, you file your taxes one time, and then you don't have to do it the rest of the time that you live in that house.
In Illinois.
In
And that's only
Illinois,
at 100% PNT. Otherwise, you do have to file every year.
every year.
Yep. And do not forget that. Put that in your calendar.
Uh,
And remember, taxes are paid in arrear in the state of Illinois. So if you bought a house last year, you're not going to get the exemption until 2026.
right.
If it's in any county other than Cook, you're going to get it on the first installment. If it's a county in Cook County, then it's going to be the second installment of 2026. So just know 2 tax periods in Illinois. You're going to have one March and I think September, October, sometime around there. So every county outside of Cook first, otherwise it's the second.
Well, let's hope they don't go to that 3 tax bracket now that they're talking about. Yeah, they're talking about that one. I want to go back to the appraisals.
Yes.
So is that like a home inspection type, or how does that appraisal work?
All right. So a couple things with that. One, you mentioned home inspection, like what goes into that piece, right? So the VA does not require a home inspection. They strongly encourage you to get a home inspection. I strongly suggest that you get a home inspection and that you actually show up for the home inspection. And the reason is that you get like a 30-page report. It seems like the house is falling apart. But when you're there with the home inspector, they'll lay it out like, hey, this is not a big deal, or this is, something that's fixable. So just make sure you go to that home inspection. The appraiser's job is to go out to the property and to determine what the value of the property is. They're also going to take a look if the place is safe, sound, and sanitary. And what they're measuring against is what are called the minimum property requirements per the VA. Now, you can go to any search engine and type in VA handbook, and it's going to take you to the VA's website where all of this information is public. The appraiser does a light inspection. They really they're not getting on the ladder, making like a home inspector where they're not spending 4 hours up there. They're basically coming in and, when I bought my place last year, I think it was like 10 minutes. They took some pictures, tick, and they're like, all right, I'm out of here. Condition of a property is a pretty big deal with VA loans. I would tell you the house needs to be habitable. It doesn't necessarily, like if it's got, my house is outdated. We're updating it, but it's outdated. Like I got a pink bathroom, a yellow bathroom, right? And I've had buddies that bought places with shag carpet. That's not being outdated doesn't mean anything. What the VA is looking out for is if there's any safety concerns, right? Broken windows, let's say not having smoke detectors, but most places are going to have that. And one, I would say the most common thing that veterans get dinged for on appraisals is going to be the peeling paint, right? So if a property is peeling paint, then they'll ding you for that.
Can you use your VA loan to buy property without a house?
Okay, so when it comes to purchasing a like you want to buy land, you can't use the VA loan to buy land, but you can use the VA loan to buy land and do a construction loan at the same time.
Oh, okay. Let's see what else here. Trying to go with a little bit more different questions for you. What's the difference between, like, where does the money come for the VA loan?
So it just comes from mortgage-backed securities. They get all securitized by them, right? So I'll kind of elaborate on that a little bit. So what's important to understand is that the VA does basically specially adapted housing. That's what the VA does. And they do the NADL program, which is the Native American Direct Loan. Okay. That's on like Indian reservation that's federally recognized, and they have like a memorandum of understanding combined with them, right? That's the only time the VA steps in. Otherwise, it depends on it. Otherwise, it's lenders that do the VA home loan. And lenders look at the VA loan differently depending on where you go. And I'm going to explain this in a military kind of acronym. you have the big army. I'm gonna use the army because I'm in the army, right? You have the big army, and let's say the army or navy or anyone sets a standard operating procedure for whatever it is that you can think of, right? How to, I don't know, how to clean a vehicle, right? But then with each individual unit, they're going to say, well, yeah, we understand that that's how they want us to do it, but we have a different way of doing it because theirs might be too risky. So we're going to say, instead of this, you have to wear gloves for this and gloves for that. So just imagine that the same thing with the VA. The VA says the VA loan is this, and the VA loan by far is very, very loose. And just like I mentioned, they didn't even have a minimum credit score. Lenders look at that and go, you know what? That is too risky for us. We want to put what's called an overlay. And we'll say we don't want to do minimum. Let's say our minimum VA loan credit score is going to be let's say 620. And another lender may say our minimum is 500. Others may say 660, whatever the case may be, right? And then with that, they also will price loans based on that risk that they want to take or not take, right? So lenders may assign higher interest rates to lower credit scores, which they typically will, but they can also control how much they do that. That's why when veterans go to one bank, they may get denied for one and go to another one and get approved, right? That's why it's important to understand those differences that, hey, just because you went to one lender, unless you just don't meet the VA's criteria, that's a different story. I would at least encourage you to look around to see what you can do with that. But it's not, it's all based on mortgage-backed securities, 10-year treasury note. I know I've been getting a lot of questions on like, is our rates going up or down? Well, they've been going up.
Yes,
Just because when the Fed rate drops the rates, it's really bad for you. Rates will go up because historically, when the Fed drops the rates, stock markets do well. So people pull money from the treasury, from 10-year treasuries into the stock market. And so when that happens, treasury yields need to increase to bring back investors. And that's why you have rates go up, because they need to attract investors. And right now, the housing market is pretty strong, and we still have record number of people buying. So I'm not really, there's no reason for rates to go down. I probably it's going to give me some backlash, but like, that's just looking at the market. Because if you think about it the other ways, if you want rates to go down, it would just further drive the spread of people being able to afford home ownership, right? Because if rates drop all of a sudden, let's say 2%, now rates are, let's just, for example, say 5%, it would cause like everyone would be refinanced, or that, has higher rates would be refinancing. Then people that were on the sidelines to enter the housing market would enter the housing market, driving price up even further. So it negates any savings that you have. That's why in October and November, they were like over $50,000 or 50,000 refinances. No, it's ridiculous. I did a video on that too. It's like 300,000 people refinance, and they saved on average $320 a month, which is about $57,000 or so in like price point, right? So people that took a chance, bought properties, actually got rewarded by reducing their payments and basically building an equity.
All right.
I know that was long-winded, but there's a lot of different ways to go with it.
And they thought I was talked a lot. David, how do people get a hold of you?
So I think the easiest thing to do, if you go to vahousingeducation.com, or you can check out my YouTube channel, VA Housing Education. You check out any of my videos, or even in descriptions, you're going to see schedule a call with me. It's the easiest thing to do, just because, getting phone calls, like, I feel bad because then like I'm just constantly just on the rotation of returning calls. If you schedule a call with me, we're 100% talking. So it's just the easiest thing to do.
That's
and
fantastic.
You can schedule the call right off of vahousingeducation.com or off the YouTube channel.
That's fantastic. I want to thank you for the evening. Very informative. I even learned some things that I didn't know about. I deeply appreciate you coming on with us tonight, and I will be in touch with you. I'm going to put your website also on the K9 website for everybody to get a hold of you.
I appreciate it.
And I appreciate you again for coming on with me. And thank you for carrying me through this tonight. It's
You
first
got
time
it, brother.
flying
No,
solo. I really appreciate it. You were a big help. All
definitely.
right,
Thanks again for
everybody.
having me on.
All right, everybody. We'll be posting when our next podcast is. Me and Michael put it up there on the website. And everybody have a good night, and we will talk to you soon.